Welcome back to the channel. A lot to unpack, a lot to talk about this week. But the big story is inflation coming in at 1.7%, a little bit hotter than some have expected. Ultimately, with core medium trim, those really important numbers that the Bank of Canada pays close attention to, also ticking up consecutively now. What does this mean for the Bank of Canada? The big question is, what will the Bank of Canada do on June 4th? Will we see a Bank of Canada that cuts? Will we see a Bank of Canada that holds? And ultimately, I think there's one more set of data that the Bank of Canada is waiting for, and that's coming up on May 30th. But this week, I want to talk about the options, what we see sort of happening right now, and our opinions on what is to come. So stay tuned. Once again, welcome back to the channel. If you have not yet subscribed to the channel, we invite you to subscribe, hit that notification bell. Don't forget to like, share the video, and let's get this content out to as many Canadians as possible. So the big question that we're getting from a lot of our clients right now is, Anth, what do you think is going to happen on June 4th? We have back-to-back meetings, June, July, here with the Bank of Canada. They just came off a hold, and ultimately, a lot of people also who are looking at homes, we saw anecdotally right here in our brokerage, obviously from this desk, that a lot of people put their buying decisions on hold. Some of them still executed as they saw a lot of opportunity, but with the data, the inflation data coming in a little bit lower. Remember, we've talked about this on the channel. Coming in at 1.7%, especially with the fact that core medium trim, right? Those are super important numbers that the Bank of Canada pays close attention to. Those numbers have actually been accelerating. And in the past, that would basically lead to, for most of us, including myself, many economists, to believe that the Bank of Canada is actually going to potentially pause, right? Wait and see what's going to happen, right? Because of the fact that when you have accelerating inflation in core things like food, and even though some of these numbers strip out volatile things like food and energy, right, and the fact that we have, as of April, the carbon tax was sort of removed or halted for the time being, right? So you're seeing what's happening right now, but those core numbers are pretty alarming. And in the past, if we would have saw that acceleration from the Bank of Canada or for the Bank of Canada, you'd almost bet your bottom dollar we would have saw just a few years ago rate increases, right, to slow it down. But now the Bank of Canada is really dealing with two major problems, not to say three, right? They're dealing with inflation sort of coming down, which is good, headline inflation, but we have core numbers, those important ones, really ticking up. On top of that, we have all this tariff uncertainty, right? How are those numbers playing into every day-to-day Canadians' expenditures, right? What are we going to see happening? Especially that there is a pause right now on most of those items. Obviously, there's still a lot of items that are impacted, but we're still in negotiation. We're still in that grace period right now with Donald Trump, and we're going to see what happens and how that uncertainty plays out. But the other thing that is going to be super, super important, and I really think requires a lot of attention, is on May 30th. That is when we get the GDP numbers, the gross domestic product numbers for Canada for Q1. If you recall, Bank of Canada governor has talked about it extensively, is that we had growth end the year off in 2024 Q4 at 2.6%. A lot of economists, are on the fence right now with where things are going to be headed, especially for the first part of 2025. I mean, ultimately tariff uncertainty, a lot of people potentially maybe front loading. I think that's going to determine the direction for the Bank of Canada. If I had to put my guess, ultimately, if we see a contraction in the gross domestic product growth in the economy, then you can bet your bottom dollar, I believe the Bank of Canada potentially is going to cut, be a little bit more proactive to make sure that the economy is continuing to run efficiently. Now, remember, this is where things get a little bit shady, because the projections or the forecast that the Bank of Canada was going to cut in June prior to this inflation data was pretty high. It was around 66%. But now after this inflation print, the Bank of Canada, the odds are at 30%, if not a little bit lower, depending on what stats you're looking at. So, I mean, ultimately these things are, leading, indicators, not leading indicators, but indicators of what economists project, our analysts project is going to happen. But at the end of the day, the Bank of Canada could pull a wild card. I do think the Bank of Canada potentially will either lower rates at this June meeting or potentially hold off, but will be lowering in July because, as I said, they want to be proactive in nature. Now, why do I believe that? You know, I mean, you can agree or disagree with me, but here's the reality. If we see growth stall out and we start to see that descent, the Bank of Canada, you know, does have to worry about inflation, right? They're going to be worried about core, medium trim. They're going to be worried about headline inflation. They want to get that to the 2% target. But if headline inflation, all the uncertainties, the carbon tax, the tariffs being where they are right now, they may potentially cut ahead just to see where things are headed. Remember, the Bank of Canada has a single mandate, right? I mean, obviously there's controversy here, but not like the US where it's a dual mandate, where it's the inflation and the economy. In Canada, it's strictly inflation. We've heard the governor talk about this at great length, right? There's only so much that monetary policy can do to fix, you know, the tariff situation. And the economy is super, super important. Inflation is the derivative, is the driver for the Bank of Canada. We want to see a steady and predictable inflation trend here in Canada. But behind all that, the Bank of Canada wants economic stability. Remember, they have all these monetary reports, they have all these financial reviews, they have all this data, and they want to make sure that the economy is chugging along equally as brilliant as they would love to see it happen in the next little while. So I do think the Bank of Canada potentially is on the road to cut. They did pause. They waited to see exactly what's happened. Inflation, you know, although headline inflation stayed low, we had core, medium, and trim tick up. We are going to be waiting on GDP, and I think that will make the move for the Bank of Canada. Once again, if we see GDP grow, that could give the Bank of Canada the cover to hold off for another month. If we see that number really plummet or go negative, then we definitely have a Bank of Canada that's going to potentially cut on June 4th. Let me know what you think in the comment section below. But ultimately, right now, all this together, just to round it all out, as we can see all these volatility, all this stuff happening right now, the big question is obviously Bank of Canada cutting. We do have fixed rates starting to tick up a little bit. There's been some major movement in the 5-year bond market, and that is a direct correlation to what is happening in the US with the 10-year treasury. So ultimately, we have a lot of banks that could potentially be moving the needle upwards, especially for fixed rates, which could lead us down the path for that conversation around variable rate mortgage. Is something that we've been talking to our clients about extensively for the past little while, but we'll do another video on that. So make sure to be subscribed to the channel. Let me know what you think the Bank of Canada is going to do on June 4th, and we'll see you next week.